We're going to keep our focus here on European financials because it has been a very big week on the continent. The European Union ruled state-supported banks must sell assets for competitive reasons. Before two of those, Royal Bank of Scotland, RBS, and Lloyds Banking Group announced just yesterday that they were getting even more government support. But Bloomberg columnist Matthew Lynn says that the UK government actually deserves some credit here for finally moving to break up a bloated and failed banking industry. I'm pleased to say he's with me now live from London. Matthew, this is now the biggest bank bailout in history on the part here of the UK government and RBS. But you found something in here that you actually like.
Yeah, absolutely. I mean, you can't be that impressed by the actual numbers. Certainly not if you're a taxpayer here in the UK, because the British government has had to pump in yet more money into its banking sector, which clearly has failed pretty spectacularly, even by comparison with the rest of the world. But the one good thing, and in particular covering the British government, it actually came more from the EU and Brussels. But they did take some steps towards finally breaking up this industry. They're going to have to sell off both RBS and Lloyds. HBOS are going to have to sell off significant assets, and in the medium term, we're looking at creating 3 new retail banks on the British high street. It's pretty modest stuff. It's only about 10% of the market, but it is, I think, an important change because everyone all around the world, we're talking about this in the UK, we're talking about it in Europe, we're talking about it in the US as well, is kind of complaining that the banks have gone straight back to their bad old ways. Seems like nothing has changed. So finally in the UK, unless you change the structure of the industry, unless you actually do something to change the number of banks, to change the competitive landscape, to change the way the banks operate, there's no point complaining if they've gone back to their bad old ways, because that's really what policymakers should be trying to do.
But isn't it already happening? Hasn't that already happened here in the U.S.? I mean, you did see Citigroup have to sell Fibro, and you have seen these arranged marriages come about as the government was trying to help stabilize some of the banks. So aren't you talking more about a question of timing in terms of rearrangement of assets?
Well, no, true. I mean, I think that's fair enough. And as I said a moment ago, I mean, it is still modest. But I think, the one thing we've seen around the world too much is in the initial phase of the crisis, about a year ago, was that banks got bigger and bigger, and governments around the world started forcing banks together into pretty much shotgun marriages as they tried to survive the initial crisis. And I think a year later, they're stepping back from each other. As quite a few people were saying at the time, they're saying, actually, we don't need bigger and bigger mega banks. What we need is smaller and smaller banks. We keep talking about this phrase, too big to fail. The one thing I say in my column is that you need to get banks to the size where they're actually a good size to fail, and the regulators can look at every bank and say, yeah, that's fine, we can let that go down if they mess up their strategy without it impacting upon the whole financial system. So it was a very modest step here in the UK, but it was a start, and I think we have to be encouraged by that.
Are you calling in some ways for like the reinstatement of Glass-Steagall, but add in a cap on bonuses as well?
Yeah, I mean, I think the UK. I think it's fascinating, which country is going to go first in reinstating some kind of separation between investment banking and retail banking. The Governor of the Bank of England, Mervyn King's been talking about that really quite explicitly. And interestingly, I mean, if you look at the opinion polls, pretty much certainly going to have a change of government here in the UK in next year when there's a general election. We're going to have a Conservative government, and the Shadow Chancellor George Osborne has been hinting at that. We don't know if he's going to go all the way, but certainly in his kind of arguments for restrictions on bonuses, he's been talking about restricting bonuses at the retail banks, which would, pretty much force people like RBS and HSBC, if they were going to have those caps, to get out of the investment banking. So, little inch by inch, I think it is starting to change.
All right, thank you so much for your perspective. That's Bloomberg's Matthew Lynn joining me from London. Just want to remind you there, he is a columnist, so those opinions that he just expressed are his. He's sharing them with us, but they don't reflect a viewpoint of Bloomberg News.